Well, good morning everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 16th of November 2023. My name is Richard Lee and I manage the Stockradar.com.au website for you. Okay, the resilience of the US markets in the face of doom and gloom is quite extraordinary at the moment. The pullback we're seeing was pretty indecisive, but this last move up has been very decisive. So I'm sort of excited at the moment because the market's doing so well in the face of doom and gloom. So a bit of a counter opinion sort of thing there. So I'm excited a bit about a few things. So we'll have a look at some charts today and see what we can discern. Okay, trading tactics this week, I'm talking about the magic filter. It's a simple, effective tool that we all use, but we sometimes forget about it because it is very useful. So I'm going to go through that and the reasons why we use it. Okay, so first we want to get into the top 10 this week. So it's actually the usual suspects, although it's a smattering through the sectors really. Dicker Data, Magellan Global Fund, Pro Medicus, BRG Retail, FANG, Aristocrat, Consumer Discretionary, Car Sales, Communications, and IAG Insurance. So they're the main ones apart from the ETFs there. So there's an interesting group of stocks there. They're actually all doing pretty well at the moment. So of our few that are doing well, that seems to be one group that is doing okay. So that's the overseas. So that's the top 10. Let's get a look at the overseas markets now and see what they actually look like. We've had another busy week this week on the Dow. We saw this drift down here, took a few weeks, and we've gone bang, 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 straight back up there again. We're not that far away from the highs now, so it's exciting times. And there's a bit of volume behind there. It's nothing too decisive, but we're erring on the positive side. We're above the moving average. Volume is good. Momentum is fairly neutral at the moment. We've had this choppy pattern, but it wouldn't take much to move it up here. But the main game here is up to around here. 35,338 is the high there. So that's the area we really want to keep an eye on. So, but you can get quietly encouraged there by what it's doing. And the S&P as well, back very close to its highs. Straight back up there again, 3 weeks. It wiped out about 10 weeks of drops there. Good volume here. Momentum slightly more positive than the Dow. So it's looking okay at the moment. And then we go to the Nasdaq, which is also, again, just got straight back up to those highs again, and we're looking for this to break here and then to move up to here for now, I would think. So, interesting times. We've had a pretty tough time for a long time, and maybe things are going to change a little bit in the near future. Anyway, we'll just monitor the situation. We're not there yet. Okay, on the commodities front, there's not a lot to say there. Copper's still going down in a downtrend. Gold can't break through resistance at R1, and crude is now crumbling after a little bit of a rally in the middle part of this year, and it's struggling a bit again as well. So that's the commodities there. We go to our market, the ASX 200, which again is probably not quite as powerful as what we're seeing on the Dow. It's sort of interesting how we sort of sometimes outperform, sometimes don't, but we're still chopping about in this range. We've still got some significant highs to break before we get really excited about things at the moment. But, we've got corners of the market, that the miners are doing better, especially the leading miners, the iron ore stocks, some insurers, some builders. There's a few things happening there. So we just got to keep an eye on it because before we know it, it could be off and we've missed an opportunity. So we just got to try and recognise what's going on at the moment. And the ASX 200 is not doing it. There's still a lot of drags on there for some of those stocks there. The banks aren't doing too well. Transurban, CSL have all been weak. So that's dragged on there. But there are, as I say, we look at the stock-specific situations and there are some great opportunities out there at the moment. Okay, so now let's get down to some stocks. Okay, now firstly we'll go through the stock pick count, which is still very weak, down 1 at 19 from 184. Data items we cover, 14 stock picks of 161 stocks and 5 ETFs of 23. So it's all pretty negative. Plenty of cash out there at the moment for us. Hopefully we can deploy it pretty soon. Okay, so that's the stock pick count. And the portfolio update at the moment is we've got portfolio's been cut quite a bit lately. Conservatives 2 out of 10, Energizer 5 stocks 2 out of 5, Energizer 10 stocks 5 out of 10, and our other smaller portfolio, more recent portfolios are 1 out of 5 and 2 out of 5. So it really is a real cash situation at the moment, waiting to be deployed at this stage. And our rates are just holding there okay at the moment, with not too much. The market's not giving us too much at the moment, so we're happy with the situation at the moment. Okay, so let's get into some stocks. Okay, now I did say this last week we will go through the REITs, and when I went through them, it looked a little bit boring, so I thought we'd just have a quick run through at the start and I'll look at some other stocks. But some of the REITs are looking interesting, and we're in this situation where we do have a lot of downtrodden stocks at the moment, which have been beaten around quite a bit. And this one as well, they did a lot of the property stocks did try to rally to the latter part of last year, which some of them fizzled out. The only one that's really going ahead is Goodman Group. It's the pick of the bunch at the moment. On key lows, we're looking at Mirvac, Scentre Group, GPT, and SIA and Charter Hall. So I'm going to have a look at those stocks now. But you've also got downtrends in Growth Point, Dexus, and chopping about is Stockland and Vicinity Centres. But I'm going to look at 4 here that have been sold off pretty badly. Trend intensity rating is -7 for Mirvac, but we've now got down to this level, which is a fairly key level of support down here, down just below $2. And we've had a little bounce here, a little bit of volume here. So we look at early signs there for some sort of bounce there. For the buying weakness trader, it's an opportunity to buy here with a stop below there. That's your risk at the moment, with the opportunity of a rally eking out from here. For us, we'll be waiting for a few more turns and a bit more price action before we actually get on board this one. But it is an interesting situation that it is another one of these stocks that is down from 340 to 190, so almost cut in half. And so that's Mirvac for the moment. Okay, a bit of volume there. Momentum's not that interesting at the moment, as you would expect. Okay, now Charter Hall, another one, which we're right down here in these lows of 650. It's been down from 222, so it's been beaten about quite a lot. It's back up around $11 at the moment. We're seeing a bit of volume there. So once again, we're seeing this demand coming in down these key lows here at the moment. So it may not be over yet, but this is an encouraging sign to start the process off. The next one is Scentre Group, which really has been incredibly resilient around this sort of 250, 245 area. It's just wandered around there. It's been in a downtrend since early this year. It's now found some support down here again. Nothing volume, nothing momentum at this stage. Just purely a support level to watch at the moment for Scentre Group. And the next one is also its support is GPT, another stock that's come down a long way from its highs. Let's just try and get it all in here. Because they are looking into now. GPT's come back down towards S1 around 350. It's come off from 650, so it's cut itself in half pretty well again. A lot of these stocks are down that sort of distance. So we're now getting to areas where we might start finding a bit of rally, a bit of support, and we build a picture, as we know, of a reversal. So trend intensity is still -7, but these stocks are getting in the zone that we start to watch for them for some good opportunities. So that's really the REITs. Just a quick coverage of that there. As I say, Goodman Group really is a standout there, which is the only one we hold in the group at the moment. Okay, so let's just go to a couple of leaders first. I looked at Telstra last week. It was funny what happened. That wasn't funny. It started off with a couple of good weeks of rally here. Let me just blow this up a little bit for you. Okay, so there's Telstra. Now it's come down to the support around about 375, 377. It's held well. It rode off there really nicely on some great volume. And then all of a sudden this week it's just at a quick an about phase, complete about phase. And I guess that's what's happened when we're in these patterns. Sentiment can change very quickly. Hang on, let me just get this back again. Sentiment can change very, very quickly while we're in these uncertain ranges. Between the highs and the lows of a trading range. Okay, so that's just an uncertain period. So we saw this dump down, we saw some good support, it's come back again. Momentum's weak, volume's a little bit middling, we're below the average. So everything's pretty negative. It is trend intensity of -7, but I'm still watching that area to look for some reversals. And it was a good side to set lift off there pretty quickly for those last 2 weeks. Okay, a setback this week, but that's the way it is. So it's about building a picture, not jumping on any 1 week or 1 day. Okay, so that's Telstra. It's down in support and worth watching. Yeah, that's a support level there. The one I'm looking at is Medibank Private here, which is again another insurer. The insurers I'm going to cover in the newsletter later on this week because they're all behaving pretty positively for the most part. And Medibank Private is certainly one of them. It's held up here pretty well. We've got the old highs up around here, which is very key. We've got some uptrending lows through here. This stock has not come back down as we would have expected. We know what happened here. It's recovered incredibly well. It's not going down. It's finding very good support at 338, 340, which is excellent. So this really is a bit of a pressure cooker is what I look at. The buyers are eager. The sellers are just sitting there And really the key there is R1, and that's what's got to go. We can see some beautiful volume levels all through this rally here. Momentum kicked up higher in the sharp move here, but it's obviously flattened off. And what do we know about momentum index? If a stock goes sideways or steadily up, the momentum index will just go sideways. So it's come back a little bit because we've had a slowing of the acceleration, but that's really just the MACD. What I'm really looking at is R1, which is the key level, which is up around 370 for Medibank Private to break. So it looks quite interesting, Medibank Private, and maybe one of those ones that's going to take off very shortly. Okay, we took a trend reversal on Revel Group a while ago. It's been a tricky situation. We've had to be very, very patient throughout this period. We saw a good downtrend. We saw a good solid support, which has started to eke out. We've got some higher lows here. Then we got a trigger point back up here, which kicked us through there. Then all of a sudden it came back down here. Our stop hasn't gone off as yet. It's still holding, so we've seen the bounce back towards the highs, which is a good sign on some good volume. Momentum positive. So the actual trend intensity rating is +9. So this sort of rebound's been quite constructive here. So this is a reversal pattern, sometimes fraught with danger, false starts and kickbacks. So far this kickback hasn't taken us out. It's tested our patience maybe, but that's just the way it is sometimes. You just have to do that. So it's trying to establish an uptrend, and it's looking okay this last few weeks for Breville Group, so that's what I will be hanging on to. Okay, now we've had a bit of research, and it's sort of an interesting situation with a stock like Boral and also James Hardie, which for us, at some stage, we had a good rally on these stocks. Let me just blow this up a little bit for you. Okay, so we had a good rally on this stock from down here around 308, and we got out on a stop back around about 450. So this was a trend. We had to protect our profits here. We had high, low, trend of high highs and high and lows, but then the stop was hit, and that took us out. And once the stop is hit, we know that there are three things that can happen. It can go down further, it can go sideways, or it can go back up again. So firstly, it started going down further. Then it started going sideways, and now it's going back up again. So if it goes back up past the old high, then that's our re-entry signal that this trend is probably going to continue higher. Okay, so the stop was really a protection thing. Let's lock that profit in and move on to the next trade. And so we're looking for the next signal now. It may come, it may not. We'll have to wait and see. But that's the way we're trading Boral at the moment, and that's how we maintain our trend strategy of always being on a trend. So, and also protecting our profits, which is pretty important. So I don't mind getting out, protecting my profits, standing aside and waiting to see what happens. That's fine. I know I've got my profits in the bank, and that's what I want to do. That. So that's Boral, and it's looking pretty interesting the way it's rebounded here. And we've had some quite good volume through here. We had a quick sell-off here, but these buyers have come back, and it's looking like they're fairly eager at the moment. So we'll keep an eye on Boral for a break above there. And James Hardie is also in a similar situation here. Where it too had a rally, not as big as Boral, but we've got a trigger point back down here at around $35. We've got a stop went off here around just above $40. And so we went neutral on this drop here. We just had to protect our profits there, which is the right thing to do. And again, the outcome can be down, sideways or up. It went down for a little bit, it went sideways for a little bit, and went straight back up again, and it's looked like it's breaking the highs this week. So trend intensity rating is 2, ready to confirm a break. The buyers have come back in. This was a really good selling challenge here, and for these buyers to come back in and whack this price up again, that's a good sign. These sellers are back right off. So it's a quite encouraging sign for both Boral and James Hardie, and there may be a little story in there for the economy. Okay, so that's James Hardie, and really we're looking at this coming back to its old high up around here, up around $56, $57. So it's looking quite interesting, James Hardie. So for those of you interested in that one, that's what that's doing. Okay, now, so that's the builders car group itself. It's been sort of going very, very nicely, thank you. And now it's still making new highs. It's had a good rally this week. We've seen the volumes come back into this one here. It just continues higher from a new high. Some work, some don't. This one's looking very interesting. And if it powers through this little resistance level up here, then we're probably going to see another leg higher for car sales. Interestingly enough, it's doing far better than Seek, far better than NEC, and RIA's doing okay, but this one here really is a standout. Trend intensity rating of 8. It's a little bit of a consolidation period here, hasn't come down. I like the long candles here, and there's some high candles here, so there's a battle going on here, but eventually one will win, and the buyers will probably overwhelm the sellers, because that's what we're looking at the moment. The trend is up, so we look for the buyers to overwhelm the sellers, and we look for another leg higher. So that's car sales, and it's been performing very, very nicely for about 12 months now, from around $18 to now to be around about $29. So that's a pretty good story for the last year. Okay, so that's most of the stocks I got for you today. We did look at a few stocks last week, some of those miners over the last couple of weeks, and they've been very, very interesting. I just thought I'd update you on Fortescue, just so you can have a little look at this one, how it's looking. Here are all-time highs up here at around $25, $26. Now, we looked at this market last week. It's now had a really good week this week again. Volume's been steady, momentum's good, it's above the average. Trend intensity rating is +2. It needs to break above R2 to swing that trend intensity up into the maximum trending zones, which it will do because it's all strong. So we're taking the first step. The next step is to get above R2, and then we look for another trending period to occur for Fortescue. So roll on iron ore, and the other stocks are also looking pretty good in that area. So that's Fortescue. Continuing on the story, a little stock that was floated off from TPG a long time ago. It's just come back into play. It's called Chewis. It's had a rally, a strong pullback, and they come back up to this rally, up to the highs up around 230. The move is looking very strong. The trend is up. We've got some good volume here. Let me just blow this volume up a little bit. Okay, so it's a bit intermittent. The volume isn't huge here, but it is supporting the upward move. And really, the main thing here is to look for this level to break here. This is just a little outside chance. This one, a small stock for you to have a look at. Always looking for opportunities for you. But it's really just a very simple picture. And sometimes it's worth showing these pictures because they do make sense. So we've got an old high up here. We've got this uptrend pushing into there. Volume's been okay, especially on the upside. Momentum is strong. So we could look above jumping on this one if it went above about 220, 230 there. Okay, so that's Chewis Group. Just a little outside one for you to have a look at. But it is looking very interesting at the moment. And some of you may still hold it as an overhang from TPG. Anyway, that's looking okay. It has recovered back to its highs. Okay, so that's most of the stocks I want to go through today. Now I'm going to go to trading tactics again, just talking about our magic filter. It is quite magic really because it does work incredibly well. But it's just a very, very useful tool. So the magic filter that I use, which is where I always start all my analysis, is what is the situation with the high highs, high lows, or low highs and lower lows. So one's an uptrend, one's a downtrend. I'm only interested in uptrend, so I'm only interested in stocks that move in high highs and high lows, and that's what I'll follow. So that's a really good starting point for any analysis if you're using price. Okay, the magic filter. It is simple but effective. You can very clearly see in a chart how high highs and high lows. It may not be there. There are a lot of stocks tracking sideways at the moment. They're not making new highs. They're not making new lows. They're stuck in a trading range. There is no trend. Okay, simple as that. Simple but effective way of looking at a chart. It gives you perspective. Every now and then you ask too many questions. If you go back and say, well, are we traveling in high highs and high lows? Then that probably answers your question. Okay. They occur regularly, so trends occur all the time. The only problem with capitalising on them is the way we trade them, the way we get too close to them, things like that. So they occur regularly for us. So just try and take a step back. Don't overthink things, and it will all unfold nicely for you. And it is also a great starting point when the stock reverses from lower highs and lower lows to higher highs and higher lows. That's a trend change, and it's a good starting point for a potential trending move. Okay, so that's what I'm always analysing. Okay, so when I look at a stock like Decadata at the moment, you can see the stock here. It travelled down from about just over $15 down to around $8, so it nearly cut itself in half in a series of lower lows and lower highs all the way down. Lower lows, lower highs, lower lows. Okay, then we get to a situation down here where this is the previous high, just like this was, and we've broken above this high. So we look at the point here, what we've got here as far as evidence goes, and we can see there's a downtrend line, which I'm not huge on, but it just gives me an idea of sentiment. The real line I'm looking at is the horizontal line across here, and that's the trigger for the reversal, but I've also got a moving average there as well. Okay, so if I just go back to this, okay, so I've also got them. So just looking at a price basis, it's broken the trend line, it's above the moving average, and it's now broken that horizontal reversal level, which triggers a trend reversal. That is the switch zone for me, where that little ellipse is there, okay? So that now tells me I've gone from lower highs and lower lows to high highs and high lows, which says that potentially there's a new trend going to start. And so far, so good. Then once we've done that, we can then add some other business into there, which I've already mentioned to the average. We can add some volume in there, and you can see the volume has been very good, especially on the upside ticks. And momentum, which is always the last one to confirm, has now got on board, and the stock is moving higher quite fast. So that's just really how you look at that magic filter: the lower highs and lower lows. When they turn to higher highs and higher lows, then that's your starting point for a trend. And it's a very good filter. We can look for all little bits and pieces, but this is a very common, reliable filter to use. So that's a ticker data, and you can see how it's performed there. Okay, so that's sort of really all I've got for today. You saw some interesting stocks today. I'm quite excited about what's happening in the US market, and some of our stocks are starting to move off, as you can see there. There's lots more in Stockradar for you to have a look at. Plenty more opportunities coming on board. Remember those stocks moving from the red zone into the grey zone, trend and 1030, there where your opportunities are going to come from, so check those out. Okay, in this month's newsletter, I think I mentioned to you last week, I'm going to detail the broad trade plan component that I outlined last week. I'm going to fill in the rules, questions, and processes all about that trade plan, so you can understand how to build your own. Have you got the right elements, things like that. Okay, so you can do that. I also discuss the importance of the cash equity balance and how the numbers game works perfectly with probability strategy to generate reliable and consistent outcomes. So I talk a bit about that as well, which is what I do, and just trying to help you understand how I work and why I work. So that's about all I've got for you today. Looking forward to the next week and see what that's going to bring in the overseas markets and our markets. So stay safe, respect your trends, heed your stops. If you want to chat, give me a call. Otherwise, I'll see you all next week. Thanks very much.